Okay, we are live. Hey, everybody, welcome to the 21 Minutes or Less podcast. We are live today. I'm one of your hosts, Keisha Milana,
And I am your other host, Nakia Smith.
and today we are talking about all things insurance. So, insurance is technically a form of self care, and we're going to tell you some more information about how. But before we even get into all the details and the juicy specifics, we're just going to tell you a brief overview of what is insurance. So, insurance is an arrangement by which a company provides a guarantee of compensation for a specified loss, damage, illness, or death in return for paying a premium. So you might be like, okay, so what is premium? It's a lot of different verbiage and jargon used in the insurance world. So we're gonna break that down for you. So premium is pretty much just the amount of money that you pay in exchange to get the future compensation. So it's pretty much how much you pay each month for your bill is like a normal term for what we would think about it. So for instance, let's just say you have a life insurance policy and they say, okay, if you pay us $200 a month, when you die, we'll give your family $200,000. So pretty much the $200 a month would be the premium. So it's just the amount you pay in exchange for actually getting the future compensation, whether it's illness, death, damage, or injury. So yes, that's pretty much what insurance is. Nikia, did you have anything to add? I feel like that was the pretty simplest way to explain it.
Yes. No, you did really well. And I just wanted to rank up some of the factors that goes into like your insurance. So the main factors that your policies are going to look for is your age, the number of family members you have, your geographical area, and then if you use tobacco. So these are some of the things that you want to think about when you are getting insurance, and that's why it's always better to get insurance early. Like
Mhm.
as soon as you turn 18, try to get insurance, or maybe your family already have a policy out for you, but you can also get your own insurance.
Mhm.
And not only do you get your own insurance, but you can also take out insurance on other family members as well. So just keep those things in mind. The earlier you get insurance, the better for your pockets, the better on your health, because as you know, as you get older, life happens. So you just never know down the line any health issues you may have. So just be mindful of those things.
Yes. And I think, Nikia, you're specifically talking about life insurance, correct?
That can go, those factors can go in life insurance or health insurance.
Yeah. Okay, cool. Life or
Mhm.
health. I just wanted to specify because there are, it's pretty much insurance for everything, y'all. Like, I can't even stress that. But some of the most common types of insurance are health insurance, life insurance, business insurance, car insurance, and then renters and home insurance. So make sure that you have, insurance for everything that you feel is valuable to you. It could be anything valuable. And then it's some not so common types of insurance as well. So there's something called a personal articles policy. So it's pretty much just for anything that's of value. It could be a piece of jewelry, it could be your laptop, it could be your phone if you don't have insurance through your normal carrier. Any personal article that has value to you, you can insure it. Then it's also things like wedding insurance. Somebody might get cold feet. That's something like people probably don't even think about, but it could really happen to any of us. So something to think about. There's also travel insurance. That's one that's kind of common, but most people don't take advantage of it because they just feel like, oh, I'm going. I'm going on that trip. Nothing gonna happen. You gonna see me when you see me. I'm not getting no trip insurance. But things like COVID have shown us that you might have to cancel that trip. So it's a good idea to have trip insurance. And then the last, like not so common type of insurance that you might consider getting is body part insurance. So if you do something with a specific part of your body and it's more prone to like go out, or if you have a really valuable part of your body, like I know some singers or rappers or artists or performers, they'll get like vocal insurance, like insurance on their voice, because if something happens to it, then that's their livelihood. They won't be able to make as much money anymore. So they just want to make sure that they're covered. So you can also do the same, but for the purposes of this live, we are going to focus pretty much on health, life, and business insurance, because I feel like that's kind of like the starting point. Once you get those, then you can always, of course, venture out into other types of insurance. But those are the ones you want to make sure that you have.
Yes, I totally agree. And let's go ahead and just start with health insurance. And the reason why I say that is because we are coming up on the deadline, which is December 15th, for the health insurance coverage starting January 1st. So if you know, need insurance, maybe you just lost your job, maybe you don't have a job, maybe your job premium is too high, you need something more affordable, you can always go to the health insurance marketplace to get your insurance for you and your family. And then they have new laws that expands financial help and to help people qualify. They also have like plans that are under $10. So there's plans out there for everybody. And then they also help you like pay for it. Like if you are working, they give you like exemptions and things like that, and they'll help you pay for your insurance. So I just wanted to start with health insurance because we are coming up on that deadline. And then, with us still being in, COVID era, era and all that, I think health insurance is very definitely important. And
Yes.
then, we also have other types of insurance like Medicare as well too. Um, you know, Medicare is a health insurance plan, administered by the federal government to help persons 65 and older and others receiving monthly Social Security disability benefits to meet their health care costs. So those are the things that you want to think about as we are approaching the new year. And the Affordable Care Act has kind of changed a little. So I'm just going to talk about some brief basic provisions that has changed. So right now, lifetime limits and annual limits are prohibited. Pre-existing conditions are prohibited. Attainment of age is 26 years old. You're guaranteed access to health insurance. And then there's the 80-20 rule for the medical loss ratio. So one of the most major things that has changed that I think is the most important is the pre-existing condition clause, because it was a clause that used to be included in most individual health insurance policies, permitting permanent or temporary exclusions of coverage for any physical or mental problems the insured had at the time of the policy was purchased. So, under the ACA, insurance now are prohibited from denying coverage for pre existing conditions. And that is huge because a lot of people couldn't afford health insurance, because even if they did have a pre-existing health insurance, they would tax the mess out of them because they had that, and their premiums would be way more than the person who was healthy. So I'm glad they included that in it.
Yes, I'm glad you touched on some of those things, because one that stood out for me was the fact that you said coverage starts at 26. So, as y'all know, I just turned 27 last month. So, that means it was like officially a year of me being kicked off my stepmom's health insurance, which was like a really sad period for me because I'm gonna be honest, I didn't really have a job. I had just moved back to Chicago, so I didn't have my job from Atlanta anymore. So I had to get on Medicaid. And all my life, is nothing wrong with Medicaid, but all my life I never had government issue insurance just because I always was on my parents' insurance. So it really just showed me the differences in insurance. And even though they give you health insurance through Medicaid and you can be denied coverage, I'm gonna just be honest, it's not as good. Like it's a lot more limited in the providers that you can see. They don't cover everything, so they'll cover a lot of your costs, but they don't cover every single thing. They'll a lot of times, if you have Medicaid and you go to your doctor, they'll try to prevent you from getting certain treatments because they'll feel like, oh, you're on Medicaid, so like you can't afford this. So I feel like they just don't treat you as well. But it is good to just get at least that basic care. Like I know I had to go to my doctor and I went and got like my annual checkup. Like I got a COVID test. I got a physical when it was time for me to like start school. I needed a physical. So it did the basic stuff. But again, if you have an opportunity to get your own health insurance, I would definitely recommend that just because, you know, it's probably going to be better for lack of a better, word. And also another thing to remember too is, so I still have Medicaid right now, but if you are in school, it don't matter how old you are, you can get insurance through your school, health insurance at least through your school. So once I was 26, I got kicked off. I had just Medicaid. But then in August, I started my PhD program. And so I go to Illinois State and they actually, it comes with health insurance. I want to say it was like $281. And it was actually good for me this semester because on my last check, I noticed that it was $281 bigger. So I called HR. I'm like, hey, it says like student health reimbursement. Like, why did I get this? So, guys, since I was a GA, which is a graduate assistant, they pretty much gave me free health insurance. So I had to pay for it initially in my student fees, but then they gave me a refund at the end of the semester. And they said, as long as you're in good standing, pretty much you're going to get the refund every semester, even if it comes out of your fees. And I feel like that's a good incentive to make sure you stay, working for the school, working as a graduate assistant, because one, that $300 looks good on my check. I wasn't expecting it. But two, it's just like that's a reward. Like it's something you should be grateful for because I actually have used the health center a lot at my school this semester. I was literally sick for almost a month and I had to go to the doctor on three separate occasions. So I definitely appreciated having health insurance. And then when it was time to pay for my medicines, because they gave me like some cough suppressants, antibiotics, just regular stuff that would have probably cost like 20 or 30 or $40. So my school actually let me use my Medicaid to cover my prescription costs. So it's like you can have multiple insurances and they both kind of like kick in to support one another. So that's just something to consider too. And just make sure once you hit 25, make sure you got a plan to go ahead and get you some insurance or else at least try to get your Medicaid for your basic stuff. And then also if you're a student, just make sure you're taking advantage of that student health insurance. If you have, some insurance that's not as good, like me, Medicaid, but yeah, I think that's really important to just highlight.
I totally agree. And like she said, you coming up on that 25-year mark, you might as well go ahead and plan ahead. Have that conversation with your family, like, hey, what are some things I need to be looking out for? Go ahead and start doing your research. And some of the common characteristics of policies sold on exchange that you want to think about is the no lifetime annual limits, your essential health benefits. You want to think about your calendar year deductibles. You want to think about your core insurance, like how you gonna pay for those things, co-payments, how you going to pay for that, how much are they going to be, and then like your out-of-pocket maximum limits, and then you also want to think about exclusions. So I can talk about like the co-insurance a little bit. So the percentage of the bill in excess of the deductible which the insured must pay out of pocket up to the same maximum annual dollar. So even though you have insurance and you paying that monthly fee, you still unfortunately have to pay out of pocket when you go to your
Mhm.
doctors, and then you have to pay for prescriptions and those things. So that's why it's very important to do your research when you are picking your plan, because you don't want to pick a plan where your deductible is like so high that you never reach it, to where you just always having to pay out of pocket, expenses. So you want to keep that in mind, especially if you are a person who have like serious health conditions. Like if you know you're gonna be going to the doctor all the time, that stuff can get expensive. And if you have to see specialists, if you know you have to be on medication regularly, those things add up. So you want to think about that. Some common exclusions that you want to think about too is, I know we live in a holistic society where everybody want to try different things, but not all insurance cover things like acupuncture or cosmetic surgery or infertility aids or routine and dental care. Actually, eye insurance and dental insurance sometimes are not even included in your health insurance. That's like a different set
A
of
different
insurance that you
insurance.
have to even get.
They
So
scamming us, y'all. They making us pay for everything.
everything, okay? So be mindful. I know, you think money is, falling from the sky, but when you start adulting, baby, these expenses start piling up. So you want to be mindful of these things. And then there are like 10 essential health benefits that you get from like your insurance. So you want to think about like the ambulatory patient services, um, your emergency services, being hospitalized, pregnancy, maternity, and newborn care. You want to think about mental health, your substance abuse disorder services, prescription drugs, rehabilitative services and devices, laboratory services, preventative care, which includes your wellness services and chronic disease management. And then you also want to think about pediatric services, including oral and vision care. So there are like so many things that you have to think about when it comes to insurance, especially your health insurance. And then if you have kids, baby, you gotta think about them too, and then the things that they need. So just be mindful, you guys.
Yes. And you mentioned somewhere in there about deductibles. So I just want to like break that down too for anybody who doesn't even understand what that is or what that means for them. So the simplest way I can explain it is a deductible is like a certain amount of money that you have to reach, well, you have to pay out of pocket before you reach. And then once you reach your deductible, your health insurance goes from, most of the time it's like 80/20, I want to say. Your provider will pay 80% of your costs, but you're responsible for the other 20%. So that's what Nakia was saying when she like, okay, yeah, you have insurance, but you still have to pay money. And it's not paying what you would if you didn't have insurance, which is why it's good to have it, because they're paying 80% most of the time. Most of the time. That's something you better look at before you get the policy. But again, that's kind of just the general standard rule of thumb. But the deductible is the amount of money that you have to hit. Well, they'll pay it at 80%. And then after you hit that deductible, they'll pay 100%. So, for instance, if your deductible is like $5,000 for the year, that means that your health insurance company is going to pay 80% of your medical costs every time you go to the doctor until you pay out your own pocket $5,000. And then they'll pay 100% for anything else for the rest of the year. But up until you hit that 5,000, they are only going to pay 80%. So you have to be covering that other 20%. So just be careful because, again, let's say you somebody who only goes to the doctor like either when you sick or just to get your checkups. So you maybe go 3 to 4 times a year. If every time you go is $200, after 4 times, that's $800. You're not hitting your deductible. So that means every time you go to the doctor, you have to pay that 20% of your healthcare costs because you're never going to hit the deductible because you just don't go enough or your deductible is too high. So a standard good deductible, I would say, is something like in the 2,500 range, maybe even a little bit lower. But over that, if you don't go to the doctor that much or if you don't have like a lot of health issues, you probably, let's be honest, aren't going to reach that deductible each year. So that's just something to keep in mind, because that just means that every single time you go to the doctor, you have to pay that bill they send you. So they'll give you they'll give you a bill, like they don't charge you right away. Insurance companies, if you're paying right away, that's what's called your copay. So that's how much you have to pay just to get seen. But what they do is give you all the services you need. They charge you for every little thing. If you want your hearing checked, blood pressure checked, yeah, they charge you for everything, and they gonna send you a bill on the back end, and that bill is gonna be that 20% that your health insurance did not cover. So that's kind of just explaining deductibles and something to think about. But again, it's gonna be a lot cheaper to pay 20% of your healthcare costs every time you go to the doctor rather than 100%. So make sure you just taking advantage of health insurance. It's definitely a form of self care, because at the end of the day, you want to get checked up. You want to go see how your body is doing. You want to make sure your hearing is good. You want to make sure your mental health is good. And it's not just physical health. A lot of times people think about that. But like Nakia said, a lot of health insurance companies cover mental health as well. So you want to make sure that you got you some therapy that you can get, and it's not costing you $200 every time, but you only paying 20% of that, which is what, $40. That's a really big difference, and it's gonna be a deterrent if you have to pay 100% every single time versus that 20%.
Yes. Yes, absolutely. And it's one more thing that I want to hit on with health insurance before we move on to life insurance. So, one of the things that you have to also be mindful of is like your doctor, like who you choose as your doctor, because every doctor isn't equal. Like
Hmm.
you can go to a doctor office and you get labs done, and it can be the labs will come from in-house, but then you will also go to a doctor where they don't have labs in-house. So any labs that you have to get, you have to pay for that. And
Hmm.
your insurance has to pay for that. They not paying for that for you. So just be mindful, like when you are picking your doctors, looking at like what all they have available for you, and if you are going to have to make some outside purchases like getting labs done.
Yes, I'm gonna be honest with y'all. Y'all know I'm Miss Transparent, but I got a like $145 lab on my credit because I didn't know I was supposed to pay for it at first. And they sent a bill, and I was like, wait, I thought I had insurance. I thought I already paid for this because I had paid like $40 as a copay to actually get the lab. So I'm like, okay, labs don't usually cost that much. My insurance gonna pay for the rest. I'm paying this $40. That's all they getting from me. No, they sent me a bill for like 150. I did not pay it because I was like, I'm not paying this. Like my insurance should have took care of that. And that's on my credit as the collections. And it was a while ago, y'all, but yeah, it's still on there to this day because I'm like, at this point, I might as well just let it drop off. So make sure y'all doing y'all due diligence to understand if y'all are paying for the labs, or if you do have to pay for it, at least if you can't afford it at that moment, call them, do a payment plan, because if you don't pay your health insurance bills, they will try to send that stuff to collections. They'll put it on your credit. And trust me, with health insurance, they know everything. They got your social security number, they got your ID, they know your address. Every time you move, they gonna find you. It's like kind of like the government. So just pay your labs, y'all, and you will be a-okay. Okay, cool. So next is life insurance. So life insurance is super important as well, and a lot of people don't think about it until they get older, or they start to hit retirement age. But life insurance is actually a good wealth builder, especially generational wealth builder. So that's something you want to start thinking about early. Like if you have kids, you want to make sure that you're thinking about that. Even if you don't, just being able to have some kind of income to protect your family, to protect the assets that you have, after you're gone and you can no longer provide like any financial support to them, that's really, really big because now that helps them to be able to, if it's your kids, have more generational wealth where they can use it for day-to-day expenses to where they're not struggling. They can save it, they can wait and use it for college. It could just be a really powerful tool, and it's two different types of life insurance. So it's whole life and term life. So you want to make sure that you understand what are your goals for the money that you're putting into your life insurance policy before you decide which one you're going to get. So term life insurance is life insurance that you just pay over a set period of time. So it could be 5 years, or it could be 10 years, or it could be like 20 years. So you pretty much pay your premium, which we already talked about is pretty much the bill you pay every month. You pay your premium every month or year or quarter, however you want to do the payments, and you pay that for a set period of time. So if you're paying that for 5 years, after that 5 years is over, you don't have to pay anything else. But you have life insurance, however much the policy was, the policy is paid off. Let's say you pay $100 a month for 5 years and you got a $50,000 policy. That means after that 5 years, let's say you might even have paid $10,000. I don't know the math, but that's still a good deal. You paid $10,000, you done with it after 5 years, but now if you die, boom, you got $50,000, which is a good deal. And with whole life, so that's something you have to pay on for the rest of your life once you start the policy. However, it has some additional benefits that could be really juicy while you're still alive versus just waiting to use it when you're, deceased. So one of them that I know for sure is that some whole life policies build cash value, which is really, really beneficial, especially for if you get a policy young, because a lot of times, let's say you pay into that for 5 years. Like, let's say you're paying $200 for 5 years. After 5 years, you have put around maybe $10,000 into the policy, and let's say the payout for the death benefit is like $200,000 or something. So you can take that $10,000 out of your whole life insurance policy. You can use it and your policy is still good. You can go ahead and keep, paying your $200 a month to continue the policy. As long as you're paying that premium, the policy is still good. And you can use that $10,000 robbing a bank, or doing that. If you have life insurance, let's say you want to buy a house, you can use that $10,000 you took out of cash value from your life insurance, and now you can use it as a down payment on your house. So that one asset that you bought, your life insurance, has now bought you a whole nother asset, a house. So just something to think about. I'm not gonna lie, I literally just got my life insurance policy last month, for my birthday. I said I wanted to do that for myself because like that's big. I know I'm gonna be in my PhD program for 5 years. So I'm like, you know what? I might as well get some life insurance, of course, protect my family if I leave, but also, I could just keep paying my cash value, and then maybe at the end of my program, once I graduate, boom, now I got the money for a house. So just something to think about. Again, you do have to pay on it for the rest of your life. So I'm literally going to be paying $200 for the rest of my life. But after, 20 years, 30 years, the cash value going to be what? 90, 100,000. Super, super, super big. And it also doesn't decrease the death benefit. So if you take that 10K out, you still going to have your $250,000 if you do, pass away.
Yes. Thank you for giving an overview of those policies. There are other policies out there, but I think for the point of this one, those are the main two to discuss. Um, but I like the fact that you brought up being able to use your life insurance while you are living, because people
Mhm.
always think, oh, I'm not going to benefit from this until something happens to me. But especially with whole life, some of the investment products that goes into them are common stock funds, bond funds, money market funds, and international funds. So you can get a mixture of those things. So you're not investing just in one type of investment. So yeah, those are things you can think about. But also, when you're thinking about life insurance, people always ask, well, which one is better? Which one should I choose? Should I choose whole life, or should I choose term? Me personally, I say, why not get both? That's
Get them
just me.
both.
That's
Yes.
just me. But if you are like on a budget, always just look at like what can I afford right now, and then maybe once I start making more money, I can look into getting another policy. And then you
Yes.
also want to think about, and the reason why I say that is because you want to get something affordable to where you don't risk your policy lapsing. And then all
Yes.
that money that you put into it is gone now. Like all the investment is gone because you don't have the funds to cover your monthly payments. So for instance, if your policy has a current value of 50,000 and fees and expenses that are 10,000 per year, based on a death benefit of like $400,000, your policy may lapse within 5 years. So you want to be mindful of that. This could occur sooner due to like poor investment performance, or if you make a withdrawal or take a policy loan. So you want to be positive, like investment performance and paying additional premiums can reduce the risk of lapse. And you always want to, like when you're budgeting, you need to be putting money to the side for that, because you do not want to risk that, because again, that could be a detriment to you and your family.
Yes.
Mhm. So
And
I also wanted to talk about like term insurance,
mhm.
because you did speak on that. So with term insurance, I do like those policies only because again, so you got to start somewhere. You know what I'm saying? So if you go ahead and get the term and then maybe get whole later, that's perfectly fine. But again, you want to be mindful of term because those policies end versus a whole life. And what you don't want to happen is you get to the end point of your term life insurance, forget that it's ending, and then you don't renew it, and then you thinking the whole time you got insurance and you don't. And so you want to, constantly be talking to like your insurer, like, hey, put some provisions in place. Hey, once I'm coming up on the term life insurance ending, reach out to me to let me know so I can go ahead and renew if that's what needs to be done.
Yes. And I really like that you said that because I think each one has benefits and drawbacks. But again, it kind of just really depends on what is your goal. Like, you really should talk to a financial advisor or, someone who works at an insurance company because they can understand what are your goals to provide you with different products that might meet your goals. And then, even within term life and whole life, there's different types of policies still. So like me, I wanted a policy where I didn't end up going with this, but I was asking my insurer about a policy that I can just pay off quick but still have the benefits of whole life. So they have like a single payment whole life insurance. It's like for the for the amount of the death benefit that I wanted, it would have been like $8,000. I didn't have $8,000 to just pay right then and there. But now that's the goal I have. Like, okay, when I get to $8,000 where I can just do this, boom, I'm gonna just do a single payment whole life insurance. And that way I'm building cash value, but I don't have to keep worrying about paying for something every single month for the rest of my life. So you have to really do what works for you. And I couldn't do that at the time. Of course, I didn't have $8,000 to just spend. But we found a policy that I feel like it works for me right now. And like Nakia said, sometimes you might can't do a certain policy right now, you got to do a different one. So I just did regular whole life, and I pay like $200 a month. Um, my benefit is like maybe a quarter million, like 250,000, and I'm satisfied with that. Like I know in my mind I have to have that $200 every single month if I want to make sure it don't lapse. And then it's like a rule for my specific company that if you miss a payment the whole first year, like it don't matter if you a day late, like your policy is gonna lapse. They're more flexible after you've been with them a year, but that first year you cannot miss any payments. So again, it's really important to know the different provisions that your insurer has in place to make sure that you're able to keep up with the payments, because if not, then you just wasted your money. And then also the last thing I'm going to say about life insurance before we move on to business is, with life insurance, a lot of times if you're doing whole life, you're going to have to get a physical or like a test to see your health, which is standard. So like Nakia was saying, it's good to do it young, which is why I did it for my birthday this year. But it's some things to remember. So for me, at first my insurance said you probably not gonna get classified as high risk because like you kind of healthy, like whatever, whatever. So once I took the test, they classified me as high risk. And it was based on a few things. And what that means is that I'm not getting as much of my insurance as I would have if I wasn't high risk. So it's like now my $200 is not gonna give me that quarter million, $250,000 death benefit. Now it's probably like 220,000, which is still great, but I'm losing money just because my health isn't as good as it could be, or because I'm doing things that they consider risk factors. So it was for two reasons. One was for my BMI. So pretty much they was trying to call me fat, I guess, which is like whatever. But that's something to be mindful of. Like your weight, they gonna take your weight, your height, your body measurements, all that good stuff into account, because if you have a higher BMI, they're gonna see is like you're more at risk for being obese, you're more at risk for developing certain diseases, certain disorders. Another thing that classified me as high risk was my family history. And let me tell you something, people think they can lie on this stuff. You cannot lie to an insurance company. When I was working at State Farm, my boss would literally tell me one time, like, State Farm has more data than the Library of Congress. So I just want you to keep that in mind. You cannot lie to insurance companies. The last thing that qualified me as high risk was sometimes I smoke hookah, sometimes I vape. I don't even smoke cigarettes or nothing like that. But they found like nicotine samples or whatever in my saliva. So they do a saliva test. So if you think you're gonna get away with like, oh yeah, I don't smoke cigarettes, I'm gonna say I'm a non-smoker, they're gonna give you a saliva test, boo boo, and you're gonna have to prove it. Like you can't lie. So they found like traces of, I guess, the stuff from when I be vaping or smoking hookah in my saliva. So that all went to account to qualify me as high risk. So that's something to think about. You will have to take that physical if you're trying to get whole life. But again, it worked out. Like they didn't deny me. They can deny you if they want to, but they didn't deny me. Um, I just don't get as much insurance for the money that I'm paying, which I'm okay with. And that's why I went a little bit over. Like originally, I was gonna get a policy where it was $100 a month, and I was gonna get a smaller benefit. But I was like, you know what? I would rather have too much money. Like I'd rather my family have more money than I think they need if I die than not enough. So if you feel like, okay, again, don't stretch yourself if you can't afford it. But if you like, okay, I could do 100, but I could do 200 too. I was just playing it safe. But go big, like it's building cash value anyway. So I know, boom, in 5 years, if I want to take something out and buy me a house, I can do that. And it's two different ways you can do that. You can either take it out as a loan, or you could just take it out and keep it. If you take it out and keep it, they're gonna reduce your death benefit by however much you took out. So if your death benefit was 250K, you take out $10,000 in cash while you living, your death benefit gonna go down to 240K. But that's okay. Again, I would rather have too much and be able to use some while I'm alive than to not have it, and it's all for the death benefit. But yeah, I feel like that was pretty comprehensive. So I hope y'all learned something about life insurance. Go get you a quote. It's really quick to get a quote. It doesn't take long. And you want to just think about too, making sure you get a reputable dealer. I don't want to promote anybody, But when I worked at State Farm, I do know my boss talked a lot about the credibility that those big insurance companies have. And it's not just the name, it's the fact that they can actually pay out when something happens. Like, you want to make sure your insurance company can pay out. If I'm paying all this money while I'm living and then my family don't get that check once I die, it's like I wasted my time. I didn't choose the right insurance company because they can't even back up the guarantee that they said that they could. So yeah, don't do that.
Yeah. And one thing I can't say about State Farm because I use them is they gonna pay.
Oh, State Farm is gonna pay every time. State Farm is gonna
They
give you
gonna
that
pay.
check. They gonna fight for you. They gonna sue somebody for you. They're gonna pay.
Yes.
Okay, moving on to business insurance now. It's crazy. I actually used to help people get business insurance when I worked at State Farm. So I'm really excited to talk about this because it's something that a lot of small businesses or new businesses do not think about needing. It's something that's really important though, especially depending on the type of industry you're in. Excuse me. So I know companies that deal with really high risk things, such as like, for instance, when I worked at State Farm, we would be really targeting people with HVAC companies, people that are plumbers, people who can really, like, if they business doesn't go the way it's supposed to, like if they don't fix somebody plumbing the right way, it can flood their whole house. Like really high risk stuff to where if you are damaging somebody's property, damaging somebody's belongings, causing them illness, that you can actually pay them. So a business policy is really important for releasing the liability from you and putting it onto the insurance company. So when something happens, like, and your business gets sued, or let's say you go into people's houses and fix them up, and then their whole house just collapse or something, you don't want to be responsible for that. So you want to have that freedom of mind knowing, like, hey, if something happens and I'm doing it through my business, it's going to be covered. And business policies are calculated based on like the type of business that you have, how much income you have for your business, and then a few other things, but those are like the main things. So you want to make sure that you are looking at, okay, what did I make last year, looking at tax returns, things like that, because your insurance company is going to ask you that. Because the more money your business is bringing in, that means you have more customers, which means you're at a higher risk for an incident occurring. So again, for small businesses, it might not be that much, depending on how much you're making starting out, because you don't have as much risk. And then for things like, we will also do things like, let's say like taxpayers or accountants, stuff like that. Those types of businesses too, it doesn't cost as much to insure because you're really thinking about like, okay, what is the actual risk associated with this business? So if you do somebody's taxes wrong, that's a little bit less intrusive than you having somebody whole house get flooded because you didn't fix the plumbing the right way. So depending on your type of business, if it's more like, oh, I got an online business or I just sell stuff, it's gonna be a lot cheaper than those high risk types of businesses.
Yes. I'm glad you spoke on that. I think high risk businesses can include like medical industry, like you said, like services, especially the food industry, because you think about
Mhm.
food poisoning and stuff like that. So again, you do want to think about what type of business you're in, and then the risks associated with those businesses. So there are like 10 top reasons for insurance for your business. So one of them, you need to know the laws in your state because most businesses are required by law to have insurance. So when you starting these businesses up, you want to look at your state laws to see like what are the regulations for those. Because like you just said, if you get sued, who that's gonna fall on is gonna fall on you. And people think that LLC is protecting them. It is in a sense, but then you also have to think about other things as well. So business insurance protects your employees as well, not just you. So if you have employees, that insurance can help benefit them. Whereas it's like medical care, missed wages, funeral benefits. So business insurance also protects your customers. So like Keisha said, if you are a plumber, it'll help take care of like property damage, um, personal and advertising injury, bodily injury, and product liability. You also want to think about credibility. Business insurance builds the credibility for your company because you are operating legally in a sense. Um, your contracts may require business insurance. So, if you're renting a building from a landlord, for an example, or borrowing money to finance goods, agreements, client agreements, all of that includes insurance because who wants to risk their funds? Nobody. You also want to think about business insurance can help recruit and retain employees. Everybody always looking at their benefit package when they when they get hired on. Period. So that's just going to help you out in the long run. Your business insurance also protects management, so it'll help cover the owner, the CEO, or the key person if lawsuits occur. So instead of again the person being sued individually, you have some buffer there to cover you and your assets, and you're not paying out of pocket. Because let's just say hypothetically you don't have business insurance to back you up and you own a home. Now you being sued and your house is online because you don't have the proper things in place. Just something to think about. Business insurance also protects against natural disasters, floodings, fires, tornadoes, hurricanes, lightning. Business insurance helps with lawsuits. Business insurance offers a peace of mind, of course. So it's kind of like, hey, if something happens, hopefully it doesn't, but if something does happen at the end of the day, my business isn't going to falter. My personal assets aren't going to falter because we have the proper legal things in place. Okay, so things to think about.
Yes, that was some really good information. And one thing that stood out was when you said business insurance can cover employees and customers and pretty much everybody associated with the business. So they're just like different types of life insurance is different types of business policies too. So the two most common ones that I've seen just when working in insurance were a general liability policy and a workers' compensation policy. So that covers the workers' compensation covers your workers in case they get hurt on the job. And when I tell you, I have seen it. I used to deal with people claims, people calling us. It was literally a cupcake shop in Georgia, in East Point, and they had an employee who got hurt on a job. I don't know how you get hurt making cupcakes, but he did, and their policy had lapsed. That was not pretty. So, literally, please make sure that you're always keeping your policies up to date, checking on them. But a workers' compensation policy is a good idea if you work with any type of industrial equipment, if you do work in like food servicing, because that deals with a lot of hot stuff. Somebody could drop something on themselves and burn, like get some nasty burns. It's just so much that could happen. And then the general liability policy, that one does not cover anything for your business. I repeat, that policy does not cover anything for your business. A liability policy covers if your customers or someone that you're doing work for tries to sue you, pretty much, or tries to make you at fault for damages to their home, damages to them. Like you could get sued for stuff like slander or libel. If you have a policy that has slander or libel covered, you're gonna be covered. So when they try to take you to court, you like, I got insurance. Like, it's okay. I'm not paying you nothing. So just something to be mindful of. Again, a liability, general liability policy for your business covers the other people, not you. So that's something to think about. But that doesn't mean it's not valuable or important. It just means that you need to make sure you have your own stuff covered as well, whether it's through workers' comp, whether it's through getting insurance to cover yourself personally. If you don't have a big business, you might not need a big like workers' comp policy, because with workers' comp, the worker is technically suing the employer for whatever they got hurt for. So if you like a one person business so far, you wouldn't sue yourself. So you wouldn't need a workers compensation policy yet. And again, I don't know all the rules for all the states, but in Georgia, I want to say it was like if you have at least 10 employees. So again, even if you have 9 though, that don't mean you can't get it. It's just saying it's legally required once you hit that 10 employee threshold. So it's just something to think about. And again, it's always important to talk to your insurer, talk to your financial advisor, because again, you wouldn't need a workers' comp policy if you're the only worker. Like if you just have your own business where you work for yourself. But you would definitely want a general liability policy, because anything could happen. I know even with me, like people who deal with wellness or life coaching, they might think like, "Oh, I'm just a life coach. Like I just meet with clients on Zoom. Like I don't need a insurance policy." Wrong. Because if you tell somebody something and they kill themselves and or something, I don't know, or if you didn't do a risk, or not even just a life coach, let's say a therapist. If you didn't do a risk assessment well enough and somebody commits suicide, their family can sue you if you didn't do the risk assessment correctly or document it. And you can't prove that you did the risk assessment. So again, stuff like malpractice insurance, that's technically covered under business policies, things of that nature. And I know even when I was a intern, they made us get malpractice insurance for the year, and it was relatively cheap. I want to say like maybe $30 for $100,000 in general liability. So that means if we said something we weren't supposed to, and the client sued us or sued wherever we were interning at, we will be covered up to $100,000. So again, if you have a business that's relatively small, $100,000 might be good enough, because you like, oh, it's not gonna be that much because I only got maybe 12 clients or 20 clients or something. But once you get bigger and you start having more employees, and you don't know what your employees are always saying to clients or customers, you want to up that limit, because the more you also pay insurance based on how much coverage you get. So if you have a bigger business, $100,000 is not gonna cut it. That's gonna be enough for like one lawsuit. You need probably $1 million in coverage, maybe even 5 million. As you grow, you're gonna need more insurance. So that's something to think about as well. Just budgeting for insurance. Make sure you think about, are my needs this year the same as last year? Do I need to budget more? Do I need to budget less? And I'm not saying don't go down on insurance. But I would probably never go down. Like, I don't know. I would just always want at least the same coverage as last year. So I would just be thinking about, do I need more coverage this year?
Yes, it's like so much insurance information out there that you can find online. Google, do your Googles, y'all, because I think because owning a business is very popular right now, that people forget the legal the legal aspect of business. So always be mindful, because that's the word of my of the night. Being mindful of what you are getting yourself into when you are starting these businesses. Okay, so I guess we're gonna move on to the next, homeowners and renters insurance now.
Yes. Um, so homeowners insurance and renters insurance, first of all, homeowners insurance, before you even get the deed or the whatever to start like your mortgage lender is going to ask you for that homeowners insurance. You're not getting around that for sure. But homeowners insurance is pretty much to cover damages that happen to your home, and it covers the structure of your home. So it covers the home. Let's say you have a garage attached, it covers the garage. It doesn't cover all the stuff in your home. That's one thing I learned. Renter's insurance covers all your things in your home because you technically don't own the dwelling. So you can't cover the actual building. That's for your whoever your what is landlord, whoever your landlord is, or your your company that owns your apartment. They are in charge of the actual structure insurance. That would technically be their homeowners insurance. You as a renter only cover the stuff that's in your property. So most renters policies start, the minimum you could get is probably around $20,000 in coverage. So you really want to think like, do I have more than $20,000 worth of stuff? If so, up the limit, get you some more. Because if your whole house, when you're thinking about how do I decide like how much all my stuff is worth, if your whole house burned down, how much would it cost to cover every single piece of clothes, your glasses, your AirPods, your computer, your charger, your shoes, your dressers, your bed, like everything? And sometimes it can be hard to put a number on that. But when in doubt, get more coverage. Because if your stuff is worth 22,000 and you only got 20,000, you're gonna be losing out on some money. But if you get 30,000 and your stuff was worth 22,000, now you done came up 8 racks. So you want to make sure that you're thinking about like how much is my stuff worth when you get renters insurance. When you get homeowners insurance, you want to think it's calculated based on like how much is your home worth. Again, it's like theoretically, if my house was to burn down every single part of it, how much would it cost to get every single brick, every piece of wood, every piece of carpet back to get my home the same or better as it was today? And a few things is going to be calculated in that is inflation. So materials are going to cost more in the future than they do now. So even though your house might be worth like $400,000, your insurance might be worth 450, just to make sure they have enough for inflation and stuff. And another thing about homeowners insurance that a lot of people don't know, a lot of times it comes with liability and it can come with medical coverages. So what that means, if your auntie come over your house and trip and break her neck, she can sue you, and she can make your homeowner's policy have to pay out on her medical benefits because she got hurt in your home. So you would be paying. But of course, that's if somebody, whoever in your home, would have to pretty much like sue you or like make you do it. But it's very possible. So make sure you have um I know at State Farm, we used to always up the medical limits and up the liability limits on homeowners insurance. So it comes automatically with, I want to say a lot of times, $100,000. We always told our clients like up it to 300,000. You never know what could happen. Period.
So I just wanted to touch on like the different options of homeowners insurance because there are different types. So you have HO2, HO3, HO5. They are similar homeowner forms that differ in generosity of coverage. So your HO4 is designed for tenants. Your HO6 is for the owners of condo units and coop apartments. And then you have your 8 HO8s, which is a modified coverage that covers loss to the dwelling and other structures based on repair costs. So, like Kisha was saying, like it can cover um if your aunt come over and she injured herself, it could cover her medical expenses. But depending on what type of insurance you have as well, it could also cover getting a hotel if you need to.
Mm-hmm.
It can cover things like that. So hypothetically speaking, let's say the neighbors next door, something happened to their home to the detriment of that you can't even get to your house. So now you have to call your insurance and tell them, hey, something has happened next door. There's ambulance here. There's there, it's tape outside, chalk on the ground. I cannot get to my house. I need to get a hotel for me and my family in the meantime, but we don't have the means for that right now. Is there any coverage in my insurance that can take care of this? Maybe yes, maybe no, but that's why you always need to talk to your insurance to see like what is covered and what is not.
Yes.
Also, you want to think about the different like dwellings, structures, personal property, the loss of use, and things like that. So, hypothetically, you have a detached garage. Hypothetically, you got a tool shed. Is that covered? A part of your house? Because those things are not attached to your home. Technically, it's not attached. It's probably on your property, but it's not attached to your home. So you want to think about those things as well. You was about to say something, Keisha. What you was about to say?
Um, about this, I don't know, but I know for sure I was gonna say when you just was talking about like stuff that's covered or like different clauses within your policy,
Mm-hmm.
people, you want to think about the deductible too. Like, I mean, is that the word? The deductible? Yeah. Your deductible is different from your health insurance and your home insurance. The home insurance deductible is how much are they going to take once you put in a claim. So, with home insurance is usually 1%, on a bad policy is 2%. On a great policy, it's either $1,000 or $2,000. The best you could get is probably gonna be $1,000. But that's something to think about because if you like can't get in your home for a day or two just because they haven't moved all the debris from your neighbor's house, you probably want to go ahead and just get that hotel yourself. Like I wouldn't recommend, of course, I would have to know the situation to decide for sure. I wouldn't recommend using your homeowner's insurance unless you absolutely have to. Because the deductible, if the deductible is 1% of your home cost, let's say your home worth 200,000, 1% of that, 10% is 20,000. So 1% is $2,000. Why would you want to pay $2,000 because you got a broken window and you want to call your home insurance? You don't. Just get that window fixed yourself. So home insurance is really for like big, big, big issues. So you
Mm-hmm.
want to make sure that you're not just putting in claims left and right because one, they're gonna go up on your insurance costs. Two, they probably gonna deny some of them if it's not worth it. Or three, it just don't make sense. You will be paying more. And how it works with home insurance, let's say you got some damages to your house that cost like $10,000 and your deductible is $2,000. They're not cutting you a $10,000 check and just charging you on the back end like, oh yeah, give us $2,000. What's gonna happen is they're gonna send you a check for $8,000. So if the cost to actually get the roof fixed is 10,000, you got to come up with that other 2,000 yourself. So you need to just make sure you're not putting in claims for like petty things. I know some people will ask like, "Oh, hey, I bust my window out. Can I use my home insurance?" And we will have to talk to them and say, like, you could, but if the window only $800 and your deductible 2,000, you never gonna see no money. Now they just put in a claim for no reason and you're not getting it paid out. So you want, again, that's why it's important to have ask questions, like have a conversation with your insurer, because if it was somebody who just didn't care, they just gonna put the claim in, and when it get denied, you're gonna be mad. But us, we like to actually explain insurance to our customers and tell them like, hey, don't do this because it just doesn't, it's not in your benefit. It's only going to be detrimental to you. So just something to think about. Make sure you know your deductible. Get the lowest deductible possible. I don't care if your bill is higher every month. Get the lowest deductible, because when it's time to actually use the insurance, you don't want to pay a bunch of money, especially if you already paying every month and you feel like it's a lot. I would rather pay more on the front end, and then when it's time to get something fixed, I'm paying $1,000 instead of 2% of my home cost. If my home a $500,000, that's like $5,000. So yeah, you need to make sure you know your deductible. And then a lot of these policies too, like people will call us like, yeah, somebody robbed me, they stole all my money. It's going to be limits for cash. It's probably not going to give you more than $2,000 in cash. And again, the deductible could be as minimum $1,000. So now you lost $10,000. You trying to get your money back. You only gonna get $1,000 back. So you just need to think about, is it worth putting in a claim before you put in a claim, especially for homeowners insurance.
Another pointer to take in consideration whether you are a renter or a homeowner is take pictures of your
Mhm.
home, because you just never know when something may happen. Keep receipts of items purchased. You can itemize them. You can keep bank statements and things like that. So when they ask for proof of these things, you have the receipts of proof. And then of course it automatically shows like the cost of that item. And then not only that, when you are invested in electronics like a laptop or a camera, things like that, go ahead and get insurance on those things as well. So now you double insured. So if something happened to those things, not only are you going to get money back from renters or homeowners insurance, but if you have insurance on things that's worth thousands of dollars, you can go ahead and um, benefit from that as well. So just think about those things. Think about, if something happens, do I have enough proof to give to my insurance company to get my funds back?
Yes, and they will ask for it. I promise you. The claims team, it's a whole fraud specialist division within the claims team. Like, literally, don't try to scam them. Don't do nothing crazy. They will find out and they will cancel your insurance, and it will be hard for you to get insurance from then on out. And don't lie about nothing either, like to try to save money. Because what happens when you get homeowners insurance, we type that address in Google and we pull up the camera and we look at your whole street. We go to the backyard. We gonna look at everything. If you like, oh yeah, we got wood or vinyl, trying to save some money because you think that's cheaper than laminate or this or that. No. If we can, we're gonna look inside your house. If it's on Zillow, we're gonna look at the pictures the people before you that owned it put up. Like, it's very thorough. And it's homeowners insurance, I'm not gonna lie, I hate that more than renters insurance because it's just so much information to put in. I gotta know, is your carpet 20% of your living room, 50% or 80%? Like, that's going, every single aspect is going to change the price of your insurance. So just make sure you be honest, because we're gonna find out. They gonna find out everything.
And last but not least, especially living in Georgia, get you some car insurance. Get you some car insurance.
Yes,
And if
car
you can't,
insurance.
at minimum, get liability. At minimum. Okay? What you
I
about to
didn't
say,
see
Keisha?
any people get impounded and put into no, they didn't go to jail, but their car got impounded because they didn't have insurance. Like, Bookie, get you some insurance. First of all, it's illegal to not have insurance. So you're gonna get impounded. If the cop is nice, he'll just give you a ticket. But you can really get your car impounded. Now you paying more money. You don't got insurance in case of an accident. Now you gotta pay the toll fee. Now you gotta go to court. They're gonna give you a ticket too. Now you gotta pay for your car to get on it. It's too much. Like, it's literally too much. Please get insurance. I'm not gonna lie, depending on yo, so insurance. What they don't want you to know is highly based on your credit. They don't tell you that. They be like, oh, yeah, it's based on your car, your neighborhood you live in. But you can get denied if you have horrible credit. Or your rates just gonna be super high and they gonna be like, dang, why my rate so high? It's something we can't see. It's probably your credit. So it's based on your driving history. We're gonna see all your tickets. So again, don't lie. We literally have systems that pull it all up and show your tickets. Um, they show if you got into a car crash before and insurance got paid out. Now I will say a little key. If you got into a crash but you never used insurance, it's not gonna show up. We only gonna see the crashes where you had to use insurance. But we gonna see if they paid out $8,000 on your old Nissan that you totaled 2 years ago. We're gonna see it. So they do it based on where you live. Unfortunately, if you live in an area with high crime, your car insurance gonna be more. Period. They do it based on the type of car you have. If you have a luxury car, insurance gonna be high regardless. If you have a like more standard car, it's gonna be lower. It's based on your car color too. That's something else they don't tell you about. If you just got like a black car, okay, cool. If you got like some kind of custom paint job, that's gonna cost you more. Or even if your car is red or like orange or like a light teal blue, that's gonna cost you more than just a black or like a white car. Um, so it's based on that. I already said driving history. So if you got a bunch of tickets, it's gonna be higher. Um, I want to say those the main factors, but again, that credit that's the hidden factor. They don't tell you that, but it we could look at your credit, not look at the score, but it's gonna just come up in the machine like you can't give insurance to this person, unfortunately. And they gonna be
Yeah.
like, why? You gotta explain to them like it could be so many different things that we don't even know what's stopping it. If you
One
have
thing,
like a old what's it called where like you got into a crash and let's say like you killed somebody or something. I forgot, but if you got that, you might have to get a special insurer. Like it's certain things that like most insurance companies not gonna insure you for. If you got a DUI, that's what I meant to say. A DUI, you cannot get regular insurance through like a State Farm or Allstate or a Geico. You have to get it's a special type of insurance. I'm forgetting the name right now. But you have to get a special type of insurance and it's gonna be super expensive. So just be mindful when like you trying to risk it versus just getting an Uber. Like you could get denied for insurance for a long time for that. And your insurance can be super high when you do get it. Um yeah, those are the main things to be looking out for. Also, don't be afraid to shop around. I know for me, even when I was working at State Farm, I don't know why, but my probably because of my credit. Now that I think about it, because I just couldn't see why. Like I had a regular car, I had like I lived in a regular neighborhood. I didn't have no tickets, but my insurance will always come up as like $600 a month. So I didn't never have State Farm even when I was working for them because it was just too high for me. So I had to shop around, and I went from I had Progressive at one. No, I have Progressive now, and then I had Allstate before. So don't be afraid to shop around. If your insurance company start calling you a lot while you shopping around, your insurance company can see when you shopping around. So they might come with like more discounts or something. Also, ask about discounts for your insurance. They have a good student discount. They have a discount where you can put a tracking device in your car and it manages like how fast you going, how good you stop and stuff, how much you be on your phone. But a caveat to those devices, if you are not a good driver, it can make your rates go up. And if you lied on anything, like the average amount of miles driven per year, that's just standard that insurance companies are put in 12,000. So if you drive a lot, like back and forth, and let's say you drove 15,000 miles that year, but the insurance company had you at 12,000, but they seen how much you really drove because of that device, your rate's gonna go up because they're gonna say, "Oh no, it wasn't 12,000, it was 15,000." So be careful with those. Sometimes I'm gonna be honest, the discount not even worth it. I know I don't have man on. I did, and then my rates went up like $20 a month, which might not seem like that much, but that's a lot for me. So I literally took it off. I told them don't even worry about it, and yeah, just be mindful with those types of devices. You could get another discount too if you do a defensive driving course. That's usually like 10%. And if you have multiple cars or if you bundle your home or auto or renters and auto, they'll give you a discount too.
So I wanted to bring up one of the reasons why your premium was probably high. It's probably because you wasn't over 25. They take that in
That
consideration as well,
too.
your age.
Hmm.
If you are 25 and younger, your insurance is always going to be higher because you are higher risk driver.
Hmm.
That's just what it is. Um, Another thing they take into consideration is the year and make model of your car. Like if you have an older car versus a newer car, you know, they take that in consideration as well. So it's it's a lot of things they take into consideration, but at the end of the day, you just need to be covered because again, that's one of those insurance that is required by law, and you don't want to get caught lacking. I said in Atlanta too, because let's be honest, um a lot of people have money now and are driving luxury cars, and you don't want to be driving in your little Honda or Nissan and you end up hitting a range or 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 some out here in these streets and you ain't got no insurance and can't and afford it, baby, because they coming for you. Okay. And it's like Keisha said, it's too many cameras, it's too many street lights.
Hmm.
Police is always monitoring for you to think that you can hit somebody and then just get away with it. It ain't happening. So get your insurance.
Yes, and another last little quick thing before we wrap up, people don't understand how insurance works. Insurance is not for your car. Insurance, the liability aspect is for other cars. So if you want your car covered, if you get into a crash, you need to have full coverage, which means that you need to have comprehensive and collision coverage. Collision coverage is if you get into a crash, they'll fix your car. Comprehensive coverage is if something like a tree fall on your car or you hit a deer, it's not a crash, but something still messed up your car, then you'll be covered. So you want the liability just to meet the state requirements. But if you have only liability and you get into a crash and your car gets totaled and the other person's car gets totaled, they only paying for the other person's car. They not paying for your car. So make sure you understand that when you like shopping around, because sometimes too when you comparing insurances, if one company just quoted you liability and then the other company quoted you liability, comprehensive, and collision, which is full coverage, then one it would explain why one would be more. And you just like, oh no, I like this price better. But you don't even know they leaving you vulnerable to getting, not getting your car fixed if you get into a crash. And the last thing I'm gonna say too, what is the name of this coverage? So it's a certain coverage. It's like escaping my mind right now, but maybe it'll come as I start talking about it. Uh, it's like the hit and run coverage. If you don't have hit and run coverage, if somebody hits your car, I don't care if you have full coverage. If you don't know the name of their insurance company or they license plate number or whatever, and it's a hit and run, it's not covered. You need to make sure that you have on the hit and run coverage. Like even if you don't have full coverage and you have liability, still get hit and run coverage. Like, cause then you could just maybe say like it was a hit and run versus you saying, oh yeah, I hit this person, but I don't have no full coverage, so I can't get my car fixed. Like, yeah. I'm the name is escaping me, but it's called something. But make sure you have that coverage on, y'all. Like, please make sure you have it on. And also, too, my last tidbit. If you do like Uber and Lyft and stuff, it's a specific coverage that you need to purchase too. So if you get into a crash while you in an Uber or Lyft or whatever, and you don't have this coverage, they're not going to cover it because you didn't tell them that you was driving Uber and Lyft, and it's going to raise your premium a little bit, but it might be like $20-$30, and it's worth it because they'll actually cover you if you get into an accident while on the job. So yeah, just some things to think about. um like, make sure you cover, make sure you have insurance, make sure you protecting yourself. It's gonna make you be a lot more peaceful when you go to sleep at night. It's gonna help you to feel like when stuff bad happen, you're not gonna freak out as much. Like, when I got into a crash before, I totaled my car, I was mad, but I didn't really, like, I would have been distraught if I didn't have insurance. Like, super,
Mhm.
super, super distraught. So just make sure that you're thinking about things that could happen ahead of time, because it just makes you less anxious when stuff happens. Now you're not in crisis mode. You just like, okay, I just gotta call my insurance company. Like, for instance, even with car insurance, like how they have add-ons for roadside assistance. When I was younger, I used to be like, I don't need that. Like, I just used to think nothing gonna happen to me, like, at all times. But now my car wouldn't start the other day. I ain't even blink twice because I'm like, okay, if I really need to, I could just call Roadside for a tow or call them to come charge it up. Luckily, it was just the battery, so I just got a new battery. But still, it just feel good when you have a peace of mind. Like, I already know who to call if this happens.
Yes. And also, if you have insurance, like a State Farm or something like that, download their apps. They have apps that you can download. So if you do need roadside assistance, all you can do is go into the app. If an accident happened, all you gotta do is go into the app, take action. While you sitting there waiting for that police report come, get out, take pictures of the car, of your car and the other party's car. Get their information, get a picture of their license plates and all those things, and go ahead and upload it to the app while you're waiting, because you're going to be waiting. You're going to be waiting, so you might as well utilize that time to go ahead and upload all the information that you're going to need to upload. And then that also helps you in the long run, because your insurer is going to want that information regardless, and you can already have that information. And then, just in case that other driver lies about something and say their damage was more than what it was, now you have evidence and proof, because you did your due diligence by taking the necessary pictures and showing your insurer, hey, this is all that happened. I don't know what they're talking about. Here's the proof. You have it, um, so you can cover yourself.
Yes, I just remember something I was talking to. Don't, don't ever admit fault in the accident. I don't care if you hit them from the back. Don't admit it. Like, don't get them your insurance people information until the police come. Like, the police is going to exchange information. Don't get them your information. I want to say, damn, no, don't even talk to them. Like, don't get out the car. Don't say nothing to them, because or if you do, record, because when people, like, they can lie on you pretty much, and it can call, people can put a claim on your insurance if they have your insurance info, even if they're the ones at fault. And like I just said, a lot of people don't know how insurance works, so they don't understand, like, if someone hits you, you need their insurance. They don't need your insurance. So don't get them your insurance if you are the victim in the accident. Literally, don't, like, call the police. Literally, don't talk to them. Don't exchange insurance. Call the police. That's all I gotta say.
Yes. And it's better to call the police instead of just exchanging information, because now the police, they have their own records, and you can just pull those records to give to the insurance companies.
Yes. Well, I hope y'all learned some stuff. I feel like even I learned some stuff today. and just refresh my memory on a lot of the stuff that I had to take my state test on a few years ago. So I'm really glad we had this chat. I hope y'all start to see how important insurance is and how it can be used as a form of self care. So make sure y'all also go follow us on Twitter, Instagram, Facebook, and YouTube at 21 minutes or less. And then you can follow our personal pages. Mine is at Keisha Milana.
And mine is at Miss Butterfly 21 MISS.
Yes. And we're going to see you on the next episode.